Hello and welcome to another update on HBAR. I'm currently looking at the 4-hour chart here. The price has tried to break out already above this green signal line that we talked about in previous videos. I mean, this is the line that you already know from previous updates, right? We talked about it. This green signal line, this is where the selling volume started to kick in. And I said to you, I warned you, this could be a bit of a sell wall. We should break it sooner or later, but in the short term, this might just be a sell wall. And the risk is that we form here some kind of a B-wave top. Just can't really get going here. So I see two possible bullish scenarios here right now. The first one is that we already bottomed in a wave 2, but then I have to say I don't really see much impulsive price action here, so I need to see another 5-wave move up. The problem is we don't really have a very clear context because on different exchanges we have different swing lows. Like on the Binance chart here, it's 7.2 cents, I think it formed the low on the 10th of October. As you can see, hold on, I put the note down there on the Coinbase chart, 8.6 cents. And so yeah, you know, the base is a bit unclear. You know, with the data, it's just the source it's just a bit messy, and so we have to be a bit flexible here with regards to the microstructures. But if we really bottomed already in wave 2, then the market should hold above the 17.2 cent level. Now this is Fibonacci support that needs to hold. You know, the problem is I don't really have much clarity here. Is this an impulse? It does look like it, but I haven't got. Yeah, I can't count 5 waves in here clearly because it's just a vertical line really. So I mean, it's possible this turns into an impulse to the upside. Then we might need one more high here, and we have another 1-2 setup, and then we can add support for wave 2. And that's the reason why this support area is where it is. What if this is just all part of a larger diagonal pattern, and we get 3 waves up in wave A? We get a pullback in wave B, and then could still get a rally in wave C. So it's just a support zone that should capture all the directly bullish scenarios. But if we now see an impulse to the downside, which we don't see yet, it's not a strong rejection from that level, from that area around 21.7 cents, or let's keep it simple, say 22 cents. If we start to see an impulse down, break support at 17.2 cents, we might just form a marginally lower low in wave C of 2 in the yellow scenario, and this here could be a B wave top. B waves can overshoot, yeah, they can overshoot. It shouldn't be a sustained break, but normally we say that B waves can technically overshoot by 138% of the wave A to the downside in yellow here. That was the swing low on the 17th of October, and that level is at 21.3 cents. I shared it with you before, and that's exactly where we got rejected. The fact that we have a wick above is irrelevant. Yeah, the 4-hour candle closed below. And it's also not an invalidation point, but it's basically the level. If we push any higher, it's more clearly the white count. At the moment, we're exactly at that point where a B wave can top. Now, if the B wave tops, as I said, we might just form a marginally lower low below that support area, because this support box is actually for the white count. If we go lower, that C wave can extend, but it doesn't have to, so it's going to be a bit difficult. So I would first pay attention to this support zone here. But ultimately, what is really needed to get a good idea that we are starting the next leg up, we need the break above the intraday high at 21.7 cents. So I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, make sure to also follow us on X. I'll leave a link for you guys in the comments section. There are charts, additional updates that we don't normally cover on YouTube, so feel free to check it out. Thanks so much. Bye-bye.